The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to be talking a little bit here about gold and silver to start out the morning. If you'll notice the first chart that we have that we put up here today, it's basically a 15-minute chart that gives you the last week's trading. And as you'll notice that we started trading in the Shanghai gold market on the 19th. And we have some friends there. I happen to be able to speak with one of them and to talk about the gold trading. They have suspended any fees for members, so they're allowed to trade free. They don't pay any fees at all. And the market, as soon as it opens, as you can see here, we were completing a perfect ABCD, down $17 from the high. At that time, it was right after our markets closed, maybe 2 hours. It stayed there just about 2 hours. And then as soon as Shanghai opened, away it went. And as you can see what's happening. The question that I asked him, I said, that's a lot of buying. I said, who's doing the selling? And he said, well, there's no selling. And I didn't have any response to that because this is an auction market. For every buyer, there's got to be a seller. So I don't know where the sellings come from, but we'll have to wait and see. Now, on the open interest front, it's very important to pay attention to what they give us at the Chicago Mercantile Exchange. Let's go back in history to when gold and silver were making their highs back in 2011. I believe it was April or August. I think it was April. Yeah, it might have been April. Anyway, the main thing that we wanted to look at that time, and we were very adamant about this, as gold was making $1,900 and silver was above $49 an ounce, we were seeing a drop in open interest in these futures. Now, something interesting has happened here in silver over the last 3 days. There's been a big rate of change decrease in open interest. In other words, the open interest that had been increasing is still increasing, but at a very slow rate. And then yesterday, with the big move up, open interest actually decreased. That is a giant red flag, folks. I don't know where silver might go to $20 from here, but that's a really negative thing. When open interest drops and prices go higher, that is short covering. And that means when the shorts are done, that means the market doesn't have a whole lot of way to go to the upside. So pay attention to this, particularly because what we have going on right now. We have this full moon. We have apogee with the moon as far away from the Earth as it gets. We also have the P index, which is at its highest level. This is a very, very strong index. We only get about 14 signals a year. They're right about 85% of the time. We found those through Dr. Ruth Miller, and we tested them over 110 years to see what their validity was, and it's very, very high. So this is a really strong cycle date in just about everything. So just be real careful in here because this is a big day. All I can tell you is that's all I see. We'll wait and see what happens with this. But silver hit, I believe we hit almost 1780 today. We're really close to it. But that's neither here nor there. But open interest dropped. That's not a good sign in silver, folks. That means there's no new buying coming in. And markets do not stay up very long without any new buying because they drop of their own weight. And remember that markets to go up vertically, they come down vertically. So just pay attention to where we are. We've got up to 2070 so far in the gold. The old high, of course, was 1286. We might be able to take that out, but we'll see. My premise of gold getting to 1190 before buying it certainly didn't work. We only got down to 1225. We had our first really good ABCD correction last night, though. That was the one at the 1245 level, and I didn't participate in that, but we'll see what's going on with this. Anyway, okay, we will take a look here at the couple of things. Someone asked a question about the coffee. We had a 20-man line in coffee, if you remember, down around the 120 level. We're now trading at 130 in coffee. I don't trade coffee at all, but it is moving certainly in the right direction. Now we have another market that is ready to have a move today, and that is the wheat market. If you'll give me 1 second here, I will get this wheat chart put up here. At least I hope I will. Yes, I think it's hit. Here it is right here. No, that's not it. Ah, there it is. Hold on just a second here. We have a lot of, I've already mentioned the things about the moon that we have going on, and believe me, there is not a commodity that works better with the moon than wheat. Wheat probably is the very best one. This was reported by Dr. Andrew Lowe in his book, The Evolution of Technical Analysis, and he talked about the Babylonians and the Sumerians using wheat for planning and stuff like that, using the moon for planning and harvesting and stuff like that for wheat. I don't know exactly what it was, but he took the first 50 pages of that book and he talked about the astrological implications of it, and he mentioned that the astrologers were actually the very first, technicians. So maybe that'll be it. I've always had a dream that someday, not a dream, this is one of the things on my bucket list, is that someday there'll be a little segment, maybe 5-10 minutes, on astrology in the markets on CNBC and also on Bloomberg. It won't come from anybody like me. It'll come from somebody like Andrew Lowe, or maybe Shane Smillian a little later, but possibly Norman Winsky. But they will they'll realize that the statistics behind it are pretty good. Far from being 100%, but far better than 50-50 by a long shot. We've had a big move here, straight up vertical move here in grains, and in particular, soybean oil, which has been the real, real leader of the pack in the beans recently. We'll put that chart up. By the way, we have Rich Anderson coming on at the break, and he's going to be giving us a lot of really good information here, on the grains, because these grains are not even planted. I mean, they're starting to plant corn now, of course, but they certainly don't have anything going in the beans yet. They don't start until around May 1st. So we'll see what's really going to go on. Anyway, we'll see what we have here. Don't understand that comment, so I thought I had a question, but anyway, what we'll do here is we will have Rich on and talk to us about this, but the main thing today is to realize that I believe we're at such a strong cycle, a lunar cycle that is really big. We have this full moon, we have apogee, we have the moon directly over the equator, and we have a P-index date all today, so pay attention. That's basically the best idea I can give you.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no questions asked money back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've had a question regarding the astrology of whether we use geocentric, which means it's Earth-centered. In other words, you're looking at the cosmos from the way of from the Earth, or heliocentric, which is using the sun. Basically, it's a question of, like, if you went to a baseball game, whether you sat on the third base side or the first base side, you still see the game. It's just the perspective of the way you see the game is different, but you'll come up with pretty much the same thing. Now, we've had Bill Meridian on, who uses Vedic astrology, and also we had Barry Rosen, who also uses Vedic astrology, and they also can come up with the same. Vedic astrology is the old Indian astrology going back in thousands and thousands of years ago. So these are things that Dr. Ruth Miller and others have taught me along the way. We use geocentric because we live here on the Earth, and that's what Isaac Newton used, and that's what Pythagoras used, and so if it was, and also Leonardo da Vinci, since it was good enough for those dudes, we figured we ought to stay with that. So that's really what we'll be watching here, as we proceed through the rest of the stuff that we talk about astrology. Fortunately, we have to get Alfie Lavoie on, because Alfie built the greatest astrology cycle program ever conceived by man. And we'll have him on. That's a good idea. And we're also going to have John Person on that does pivot point analysis very shortly. And then we're going to have Woody from Woody's chat room on sometime in the next few months, because he's an old market veteran, and he'd have some good information for us also. So we'll have some other new guests that we have along the way. So as we come up here on the markets today. Folks, I just someone's sent me an instant message about the silver. How important is that thing in open interest? Yes, it's the CCI Woody. That's him, and he's an old friend. He lives here up in Scottsdale in Arizona, and he doesn't do much anymore, but he's still around, and we'll have him on as guest. He's a very, very nice man and given a lot to people throughout throughout the history of his markets. Getting back to the open interest, folks, what happens is when we have an auction market in commodities, for every buyer there's got to be a seller. And I check with the CME and I look to see it today. Open interest is going down with prices going up, and that means that's short covering. I've showed you this formula several times. In fact, I'll try to pull it up. I have it somewhere in my Dropbox program, but I'll put it up there to let you see that. But this is exactly what was happening when silver was running to its highs at 49.50 way back in 2011. And it was going straight up, but open interest was dropping, and all we were saying is just be really, really careful in there, and that was the same thing to to keep an eye on. But that's what we're watching with the open interest. I follow it all the time. Mr. Z follows it in the room, so there, and others do too. But it's just a just a way of looking at the person that makes a professional out of looking at the open interest is Steve Breeze. He's probably the best there is at looking at open interest, and he's been alerting his folks that gold has, even though open interest is increasing in the gold, it's increasing at a very, very decreasing rate. The way you get to the open interest, I'm going to put it in the room here so you can see it, and you won't be able to do it. You just go to www.cme.com. And then when you see where it asks for data, DATA, that's data, and then all you have to do is go to where it says volume and open interest, and it'll be right there. And it's very simple. It might take 30 seconds to do the whole thing, and there you go. Mr. Z has put it in again, giving us more information, but just keep an eye on it. And what Steve Breeze does is he keeps statistics on that, the rate of change of how the open interest is acting, and then he reports to his subscribers on that. And there's several people in the room here that I know that actually, rely on Steve's analysis, and which is quite good. And but we'll watch that anyway. That's just something to pay attention to. We're trying to keep you from, hurting yourself or anybody else if they stand in the way. But we'll do that one at a time. But if we start to see this more and more every day, then it's going to be a slam dunk, because markets that go vertical, and silver is no question, we've had a vertical move for the last 12 weeks in silver, not like anything we've seen since 2011. By the way, remember, silver was the laggard, and then it turns out, the same way. Mr. Tucker, you are absolutely correct. What Mr. Z or John Chaney does in this room is absolutely unbelievable. What he helps us with. He posts trades ahead of time, and I happen to watch these very, very closely, and he does a fabulous job with his trading. And his main thing, and that's the main thing that you really want to consider, is how he handles risk. And he does not risk very much on some of these things. So when he posts something in there, pay attention to it. Some of the things, we don't trade, that he posts, but still, they are there for you if you'd like to do that. But we'll be able to see if some of this stuff happens. But he does a super job, as do most of the other people here at TFNN. I think Tom weeds people out that don't do a very good job, and I always look over my shoulder to see if the weed eater is right behind me. But you're right, Duffy. Mr. Z is the man. Okay, it looks like we're going to have a rough time getting Rich Anderson here today. He seems to be quite busy, so we're going to be with ourselves for the rest of the day. I wanted to give us a little trip. We're going to go across the pond here to Hong Kong, and we're going to take a look at the Hong Kong market because we did have a butterfly pattern forming in the Hang Seng. We closed a little bit lower than the close that I'm showing up here right now. But the key here is that when we gapped up, if you'll look back here on the 13th of April, when we gapped above, excuse me, when we gapped above the 786 retracement, that was telling you this market certainly wanted to to go a lot higher, and it has done that. Now we are over this big cycle. I can't tell you how big this cycle is because I've already told you how big this cycle is. Whether it works or not remains to be seen. But with all of these together like this, it would really be unusual for this cycle not to bring in at least a short-term correction in everything that's been going up, and on the opposite side, everything that's been going down. And it'll be a change of trend for darn near everything. And it's all related to the lunar phenomenon of, our bodies are 80% water, and we are moved by the tides, and that's probably what makes it move. And if you remember, we've had our good friend Al from, hold on one second, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have posted the chart of the new crop soybeans. Those are November soybeans. You see we've gone above $10 a bushel. I believe we got it to about $10.18 last night. We're now trading around $10.07, I believe, or just a tad under that. So we'll keep an eye on that. Remember, these grains really react well to full moons and new moons, and since we're over a big full moon with apogee, there should be at least a beginning. I mean, these crops haven't even been planted and they're going nuts. That's just telling us that you got to get ready for something later in the summer, because if they're this crazy before the crop is planted, what's going to happen if we get a little bit of hot weather or too much rainy weather and they go nuts? I don't know if it's all related to the inflation that could be starting because of the gold and silver, but we'll have to just wait and see if that's going to be the case. I'm not sure, but we'll watch what's going on. Okay, now another market that's really ripe for a rally, folks, are the Treasury bonds. We're now trading at 162.13. The low is 162.10. That is a 78.6 retracement of the whole move that we made over the last 7 weeks. So if you like 78% retracements, along with a nice ABCD pattern, you're looking at a potential low here in bonds, and the risk in this particular trade would probably only be about 8 cents. That's the main thing that you'd be watching here. So keep in mind that that's just a number, but it happens to be a very important Fibonacci number because it's the square root of 0.618. Now what we need to do is actually gold's actually broken about $13, not quite, about $10. And so there might be some selling coming into this today, who knows, but we've had a pretty good wheat's already dropped 20 cents today from the middle of the night to where we are presently. So we're going to have some pretty good things moving here in the market. So we'll pay pretty close attention to some of these things. Okay, now the next thing that I wanted to talk about, if you'll give me 1 second here, and I'll put it up for you so we can take a look at it. I'm very sorry we're not able to get Rich on, folks, but he's just busy, and you can see the jumping around that we're seeing in some of these markets. There's really not much we can that we can do about it. Now, I wanted to also talk a little bit about corn here, because this is all part of what we're looking at here. We had this big ABCD pattern in corn after we had the presumably negative report back on the 28th of March. And since that time, we've rallied over 40 cents a bushel in the corn after that big ABCD 3 drive to a bottom pattern. And so what we'll be watching now after this, we will get a correction sometime down the road. The question is whether it's going to be today. It started a little bit today because we've already corrected 20 cents in wheat and more than 20 cents in the grains. But we'll watch what's going on with this. Wheat's actually broken below $5 a bushel now, which is pretty big drop from overnight. That's well over 20 cents. So let's just go on to the rest of the soybean market, because we need to look. We looked at November beans. Now we need to look at the July beans, because that's the old crop beans. And remember, folks, these beans have not even been planted yet. They don't start planting beans until late April or early May. Then they're harvested in the October-November period. But this is highly unusual to get a move like this, and it is not related to that Mexican volcano that went up. You don't even hear any news at all about the Mexican volcano. I searched on CNN. You see a few things on YouTube, but as far as coming off the television, it's like a non-event. and it's the biggest volcano eruption in many, many years in Mexico, and it's the largest volcano in Mexico, and yet no one's paid any attention to it. And maybe that's just the way it is. I remember when Mount St. Helens blew in 1980. I mean, that was on the news every day because they could see the snow melting, and then they could see the trees turning around, and then finally the mountain blew, and that was a huge thing, and that caused a big run up in the grains that year because we had so much ash in the air that it affected the sun, and that affected the crops, and bada bing, bada boom, one thing led to the other, and that's the way it goes. Okay, getting back to the stock market, we've got up to 2,100 in the S&P. However, the NASDAQ has not violated this head and shoulders pattern on the weekly basis that we've been looking at. In fact, the NASDAQ couldn't even make a 61% retracement of the previous day's range yesterday when the S&P was going up to make a new high, and also the Dow Jones was doing that. We had some negative divergence across the NASDAQ, so watching it. The financials have been the part of the turning point of this. We've had a pretty good run in some of those. We did get up to the 61% retracement in the banking index, but overall the main things doesn't really mean anything from a from an overall market, because it's a small part of the market, but the banks will be saved no matter, what they decide to do. So we'll watch that very closely. So we'll keep an eye on how some of these things run around in the markets. But right now we have the market has stocks have sold off just a tiny little bit. We've come down about $16, $17 in gold. Let me see. We went from 72 down. We've dropped $16 in gold. So that's right at the harmonic number. That should hold that, and we'll watch that, also quite closely. The question that someone's asked me by email this morning was whether there is a possibility that we're going to make new highs in the New York Stock Exchange Index. Boys and girls, if we do that, it's time for Billy Ray Valentine and his good friend Lewis Winthorpe III to pick up the old trading chuck wagon and move out into the desert with my trusty burro named Guido, because that would violate all of the technical stuff that I'm looking at. I remember the time that I was with Bryce Gilmore in 1990 in Pismo Beach, California, and Bryce was a master at Elliott Wave and wave analysis. There was nobody any better than him, and he told me that if bonds, someone asked me the question about bonds, and that is whether if bonds were to hit, I forget what the exact price was, but if they were to hit 160.102, he said he would take all of his books and throw them in the ocean because all of the stuff would be no good. And sure enough, the bonds never did hit that price. And it wasn't until about 5 years later that he explained to me that there were so many things coming together at that price that if they went above it, that it would be something of a just a outlier event that would mean that the technical analysis wasn't working, and he believed in it so strongly that he didn't think that could happen. Okay. Looks like we got to take a little break here. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solutions CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I'm going to post a chart from John Murphy showing you the advanced decline line, still making new highs above the May 15th area. That doesn't mean the stocks are making new highs above that. That just means there's more advancing issues than declining at this particular time, because it's a ratio of advancing versus declining issues. And that's, if you'll notice that when it's at the lowest, that's when the market's making the bottom, and when it's the highest, that's when the market's making a top. So it's actually a pretty good indicator of a potential trend change. And what we try to do is look at a little bit of astrology and a little bit of pattern recognition to see if we're getting, close to these areas. So we'll watch these, very, very closely, and we'll see if we can. Oh dear, I've lost data. This is always fun. All right, we'll see what's going on here. I don't know what the problem is, but we'll try to get it fixed. We will take a look here. We've had a question about the, oh boy, I'm really in trouble now. Hold on one second here. There we go. This next chart that I'm going to show you, we're going to be reaching this level this morning. That is the gold dollar index. And that's the GDX. This is the one that Dr. Martin Armstrong uses for Martin Armstrong Economics. And he actually has issued a very strong get-out-of-jail-free card in gold. He felt that 1260 was going to be the area of a potential top. Of course, we had a quick run to 1270, and now we are going below that. So we'll see if this is going to be. This is a big day, folks. I've been doing this a long time, spent a lot of years studying this stuff with the statistics behind it. And believe me, this is about as high a statistical day as you can come up with from a lunar standpoint. I mean, this has got a lot of things, going on. Frank Tauscher, who used to write the Super Traders Almanac, he passed away in '95. And he really believed that P-index thing with the lunar was probably one of the, if not the best, single timing mechanism for short-term trades that he had found. And this was, something that Dr. Ruth Miller had given me. I wanted her to call it the Miller Index, but she wanted me to call it the Pesavento Index. And since she had more votes than I did, that's what it's named. But it's just a statistical anomaly. In other words, if you took a bell-shaped curve and you looked out at the second standard deviation out at 98%, if you have 4 or less aspects on one day, or 14 or more, that's a really, really important time frame. Now, with the, if you take a look at what happened on March the 5th of 2009, we had a similar type situation where all of the planets were lined up on one side of the zodiac, which is, that just doesn't happen very often. That's such an outlier. There were 10 of the 12 planets were lined up, 10 of the 12, 9 of the 10 planets were lined up in that particular house, which was Pisces. And of course, the market turned the next day, I believe. The bottom was on the 5th, and it finally turned up on the 9th, but I believe the bottom day was the 5th when we had the last, what was it called, too big to fail thing with when Secretary Paulson was telling us that the end of the world was coming, and then if we didn't take all the banks, bail out all the banks, then we would really be, in serious trouble. So what I'm doing right now, folks, is I am bluffing as best as I can. We've got Rich on the line. I hope if you're there, Rich. I have no data coming in. I don't know if you're on the line or not. If you are, I hope you, if you come in, I would certainly appreciate it. But frankly, it's getting late, and maybe we'll have you on tomorrow. That would be the best thing to do. But I don't have any way of checking to see if anybody is here. Anyway, we will get him. He is back in the office, but he's just really busy. We'll have him on tomorrow. That's basically what we'll be looking at, and we'll see what's going on. No, Duffy, I'm okay on that aspect. All I'm doing now is I'm getting ready for the first Saturday in May coming up from Churchill Downs. We'll be ready for another winner. As each year, we always get the winner of the Kentucky Derby. It's always reported here on TFNN. Unfortunately, it's always reported on Monday, the day after the race. We're trying to get it on that Friday before the day of the race on Saturday, but so far we've not had much of luck doing that. But it's always fun to watch it, and maybe we'll even have another Triple Crown winner going on. Rich, are you on the line?
Yes, I am, Larry.
Hey,
Can
Rich,
you hear me?
Yeah, it's good. We'll have you on for a few minutes here, and then we'll have you on tomorrow. How's that?
That's great. I was here, and then we had an internet problem for a minute.
Yeah.
But I'm good now.
I'm having one myself. Tell us about the grains, Rich. That's what everybody's interested in.
Well, it's real simple. It's the grains and the energies. The fund money has decided that they want to own things to protect against inflation, because the general consensus is now that the Fed's going to do nothing until we have some inflation. So that you notice the crude oil and the energy markets were up yesterday too. And to complicate that, in the grains, we had option expiration tomorrow. And so if I'm short 100, let's say 390 or $4 corn calls, every time it goes through the strike price, I have to keep adjusting my deltas to stay neutral. And so I keep buying and buying and buying. And you'll see that's what happened into this morning's highs. And now, once the buying's all done on these gamma guys, then the market starts to go down. Now I got to start selling. And that's kind of what's going on. So it's been a crazy day. We traded the whole U.S. soybean crop yesterday. We broke the record volume by over 200,000 contracts, Larry.
Oh my God! I know
this is incomprehensible. And I might add that in the old days, when we were in the business of being brokers, you had to have a futures license. Today, you just call up your stockbroker and you're buying an ETF. And so there's a asset allocation by these huge sovereign wealth money managers. They're changing. They feel the stocks are relatively fully priced, so they're going and looking around and where's there some value? Well, yesterday silver, beans. I mean, July beans gained 23 cents on November beans yesterday. Now, you would normally think that the cash market's going to follow that, but the cash market actually was cheaper yesterday. And on top of that, all this short covering, the Chinese bought 20 loads, cargoes of beans from Brazil and another 9 from the U.S. in the last week, because they're covering their cash needs that they had anticipated they'd be able to buy a whole lot cheaper. So it's a short covering rally by everybody. Option expiration, the gamma guys had to adjust. And I'll talk to you tomorrow. And sorry about today.
No, that's okay. I know you're really busy, buddy. So we'll talk to you tomorrow. And thanks for joining us for the few minutes that you came on. Okay.
All righty. Talk to you.
All right, buddy.
Thanks.
See you tomorrow.
Yeah.
Okay, we'll have Rich Anderson on tomorrow, folks. We will. He'll give us a better idea. He's also shared some information about what's happening in soybean oil. We've never had this much of an open interest in soybean oil. I mean, it's just like the whole world is long soybean oil. But remember, the other half of that oil short is somewhere. But who has it on? It's usually not the little guy when things are going up like that. It's commercials selling into that strength. Possibly, so we'll watch it very, very close. Anyway, we've had a pretty good correction in some of these things, well over 20-25% in cents per bushel already this morning. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we'll see how these markets end up today, but we've got a little bit of activity moving. I think it's related to this lunar thing, but we never know for sure. That's the main thing. We will have Rich Anderson on tomorrow discussing what we have going on in the grains because, like he mentioned, it's not just a futures market anymore because of these ETFs that they have with exchange-traded funds. They can just pick up the phone and call their stockbroker. No one does that anymore, but they go online and can literally act like a wholesaler or a processor or a farmer, whatever they want to be, and just go in and buy and sell just like any of the futures contracts. They trade a lot differently. Believe me, those ETFs are not the same as trading the futures. First of all, they're not open during the time that we usually are, so you want to keep that really closely in mind also, because there can be huge gaps in some of these ETFs. We've seen this in silver and gold during this last run up. So this is a big cycle day, at least I think it is. So does Norm and a few of the other people that we've had on the air here into this zone. So we'll see. But it's a beautiful full moon. If you get a chance to see it, it's really spectacular here in the desert. It's just looks like a giant silver dollar in the sky in the early evening, and then of course in the morning it lights up the desert, quite nicely. So keep an eye on the price of 2110 in the S&P, because if we get above that, that is going to be a breakout in the S&P from the old highs. The old highs, of course, was 2134, but if we break above that 2110, that's a sign that we're most probably these cycles are failing and we're going to be, moving higher. I don't think that's going to happen. You're seeing a lot of divergence between the NASDAQ and some of these other things that are not doing nearly as well. Even the banking index, even though it's been strong, is still at a 61% retracement from the May, 19th highs. So the longer term big picture of the 5-wave expanding triangle that we've looked at here in the stock market is still in force. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.